Good morning and welcome. This is part of the Audit, Control, Governance, Risk and Compliance Series 1. As part of this series, we will be covering 11 areas. The details are as shown. Good morning. Welcome to this series on audit, controls, governance, risk and compliance. Today's session would be related to compliance. We have covered governance and risk. Now we will be focusing on the compliance, which is the C of the GRC. Welcome board. Let's start. A compliance management framework is an essential component of an organization's governance, risk, and compliance strategy. It establishes the policies, procedure, and controls necessary to ensure adherence to law, regulations, and industry standards. A well implemented compliance management framework helps organization operates ethically, mitigate risk and avoid legal repercussions. On the other hand, the absence of compliance management framework can expose a company to regulatory fines, reputational damage, financial losses, and operational inefficiencies. This series explores the importance and the benefits of compliance management framework and the disadvantage of not having one. So what's compliance? Compliance refers to the adherence to laws, regulations, standards, and internal policies that apply to an organization. It ensures that businesses operate ethically, securely, and within legal boundaries. So, by definition, we are saying that compliance is adherence to laws, regulations, standards, and internal policies. So what are these laws? What are these regulations? What are these standards and policies? Well, there are quite a few types commonly found in BSFI sector and few other sectors which we'll go through. What you see in the screen now is a snapshot of some of the critical compliance that are followed across the sector, namely the RBI guidelines in India. From US, you have the Federal Reserves and the OCC. We have Basel III. We have the Foreign Account Tax Compliance Act, the AML and the KIC regulation, the SEBI compliance guidelines, the GDPR, the DPDP Act, the SOX, the PCI DSS, the IFRS and GAAP, which are related to the accounting standards. So while this is for the BFSI segment, we do have similar ones for cybersecurity and IT compliance, wherein ISO 27001, NIST framework, SWIFT CSP, SOC 1, SOC 2, SOC 3. We also have compliance guidelines for risk and governance, which is the ORM, the ICFR, the third party risk compliance, business continuity and disaster recovery standards. From a global compliance perspective, there are standards which are related to GDPR, the CCPA, the ESG regulation, which is related to environmental, social, and governance, and we have the anti bribery law, which is from FCPA, UK, and UK Bribery Act. Do note this. What this means for experts in risk, compliance, governance, and audit, the number of standards and the framework that you'll have to ensure your organization is aligned to. It's no easy task. Just think through the effort that a risk manager has to invest in, the organization has to invest in as a whole. When you're dealing with a business in that country, you have the country guidelines as well as the global one. And if you have a combination wherein you have to take care of the IT regulation, the cyber security regulation in a particular country, which means you will have to factor in the BSF sector compliance standards. In addition to that, you have to comply with cyber security, you have to align with risk and governance, and so on. This becomes a highly complex area. hence the need for a specialist. So this is for a food for thought for anyone who is either already into risk management, audit governance, management as a whole, or you're a student or you're planning to enter into this field. These are things which would be required or expected of you. Some of the guidelines might be more applicable to you in your region, in your country, or in your specific field. An expert in the field is expected to know these any given point of time. The management would be dependent on you to advise. Hence, it's a subject in itself. As part of the series, in future, I will be going through each of these in detail, but that would be series 2. At this point, for this conversation, it's a top view that I have provided. Let's continue. Now let's review some case studies of organizations known for having strong compliance program, along with the benefits they realized due to that. First case that we will look at is from Microsoft. What they did was they built a comprehensive compliance infrastructure, integrating AI and automation to monitor the risk. They invested heavily in employee training, internal reporting channels, and third party due diligence. They leveraged data analytics to assess and predict risk areas. By doing that, they avoided significant regulatory penalties, especially under the Foreign Corrupt Practice Act. They strengthened brand reputation and investor confidence. They improved operational efficiency and real time risk mitigation. The second case is from Johnson and Johnson. They developed a strong compliance culture rooted in its corporate philosophy. They implemented rigorous quality assurance system across manufacturing. They integrated global standards like ISO and conducted regular internal audits. By doing that, they achieved faster regulatory approvals. They maintained high customer trust and loyalty. They reduced incident of recall and non-compliance penalties. The next case is from Deutsche Bank. They invested substantially in strengthening their compliance function after, of course, there was a regulatory issue, but they then strengthened their overall function. They hired professionals in compliance and risk space. They revamped their KYCs, the transaction monitoring system and reporting system had an overhaul. The benefit they gained primarily were they regained regulatory goodwill and reduced future fines. They improved client onboarding speed through digital KYC. They enhanced stakeholder trust and improved internal controls. The next case is from Unilever. They adopted sustainable sourcing and supplier compliance program, or they audited suppliers for labor law violations, environmental impacts, and ethical practices. They set public transparency and sustainability targets. From a benefit perspective, they increased customer preference for ethical products. They gained access to ESG focused investor and funding. They improved supply chain resilience and compliance with international standards. The last case in this is from Adobe. In here, they built privacy by design into the product and their services. They created a centralized privacy governance framework. They implemented customer self-service tools for data access and erasure. The benefits they gained was they avoided major GDPR penalties. They increased customer retention due to trust in their data practices. They differentiated products through their privacy features. Now let's look at the importance of compliance management framework in an organization. A compliance management framework is crucial for an organization to operate efficiently and lawfully. Some of the key points are as shown on the screen. Let's go through them. Organization must comply with industry regulations such as financial reporting laws, data privacy regulation, and workplace safety standards. A compliance management framework helps organization to stay up to date, with changing regulatory requirements and ensure they meet compliance obligation. Non-compliance can lead to hefty fines, legal battles, and even the suspension of business operations. A structured compliance framework helps mitigate legal and financial risk by proactively addressing the regulatory requirement. A compliance management framework establishes a culture of integrity and accountability within the organization. It promotes ethical behavior by defining clear policies and expectations for employees. Compliance failure can lead to public scandals, loss of customers' trust, and reputation damage. The management framework ensures the organization maintains a strong reputation by adhering to ethical and legal standards. The CMF includes anti fraud and anti corruption measures, reducing the risk of financial crime. Internal control helps detect and prevent fraudulent activities within the organization. It helps standardize policies and procedures, streamline operations, and reduce redundancies. The framework minimizes errors and inefficiency by establishing clear guidelines. The CMF integrates with the organization's overall risk management strategy. It helps identify, assess, and mitigate compliance related risk. Compliance training programs educate employees on regulatory requirement and ethical conduct. The CMF ensures that employees are aware of their responsibilities and obligation. Now, from a benefit perspective, implementing a compliance management framework offers several advantages that contribute to long term organizational success. The details are as in the screen. Let's go through them. A CMF minimizes the risk of lawsuits, regulatory fines, and financial penalties. It ensures that organizations operate within the legal boundaries of its industry. Compliance enhances public perception and strengthens customer trust. Companies known for ethical practice attract investors, customers, and business partners. Employees feel secure knowing they work in an ethically and legally compliant organization. Clear policies and guidelines create a structured and fair work environment. Investors prefer companies that demonstrate strong compliance and governance practices. A CMF assures a stakeholder that the organization operates transparently and responsibly. Compliance framework provides data-driven insight for strategic decision making. They help organizations assess potential risk before making critical business decisions. The CMF addresses data privacy laws such as GDPR, HIPAA, and CCPA. They enforce security measures that protect sensitive customer and business data. Organization can ensure that supplier, vendors, and partners adhere to compliance requirements. A CMF helps mitigate third party risk by enforcing compliance in contractual agreement. Compliance framework include contingency plans for handling crisis and disruptions. They ensure that the organization remain operational during regulatory challenges. Let's now review some of the case studies where poor compliance practices resulted in losses to the organization. The first one comes in as shown above, the Wells Fargo case. In this, the employees created millions of unauthorized bank and credit card accounts to meet aggressive sales targets. Internal controls and compliance function failed to detect and prevent these misconducts, which was going on for some years. The loss that was experienced was in billions of fine, penalties. Leadership had to change. The brand reputation was severely impacted. Customers' trust was dented and had to face long term regulatory restrictions and increased oversight. In the next case, Volkswagen intentionally programmed diesel engines to cheat emission tests. Internal compliance and engineering ethics fail to prevent or disclose the wrongdoing, resulting in fines of billions of dollars, legal settlements, and vehicle recalls. There is a sharp decline in stock prices and global reputation. Criminal charges for executives and a permanent trust deficit. The next is wherein data of over 87 million users were harvested without proper consent and shared with organization for analysis. Lack of data governance and third party risk oversight was highlighted. There were multi-billion dollar fine, in fact largest for the privacy violation at that point of time. Intense regulatory scrutiny and hearing before the US Congress. Long-term damage to user trust and platform credibility. This is the case from Facebook Meta and known famously as the Cambridge Analytica scandal. The next one is from the Deepwater Horizon spill case, wherein BP ignored safety protocols and risk management recommendation, leading to a catastrophic rig explosion. This was the worst oil spill in US history with massive environmental and human impact. The losses were in billions of dollars for cleanup cost, fines, and legal settlement. Top executives faced intense scrutiny. There was public backlash and definitely a very long term brand and impact and shareholder value had a serious impact. The next one is from health tech industry. The company misled regulators and investors about the capability of its blood testing technology, lack of transparency, and failure to meet healthcare compliance standards. Result, the company collapsed, the CEO was convicted and imprisoned, investor lost $600 million, became a cautionary tale of compliance and governance failure in a startup. Let's now summarize the disadvantages of not having a compliance management framework. Organizations that fail to implement a compliance management framework face numerous risks and challenges. Some of them have been listed here. In summary, organizations without a CMF are more likely to violate laws and regulation. Non-compliance can result in fines, legal action, and even business shutdowns. Compliance failures can lead to negative publicity and loss of credibility. Customer and investor may withdraw support from a non-compliant organization. Many industries impose heavy fines for non-compliance, affecting profitability. Legal battles and settlements can drain the financial resource of the organization. Without internal control, employee may engage in unethical or fraudulent activities. Lack of oversight creates opportunities for financial mismanagement. Non-compliance can lead to business interruption due to regulatory investigation. Inefficient processes arise when there are no standard compliance policy. Non-compliant organization may face higher insurance premium due to increased risk. Unexpected legal and operational costs arise from lack of compliance measures. Many clients and partners require compliance certification before doing business. Hence, not having a CMF in place has a direct impact. Non-compliant organization may be disqualified from contracts and government tenders. Organizations without a compliance framework are more vulnerable to cyber threats. Data breaches can lead to lawsuits, financial loss, and loss to customer trust. Employee may feel uncertain about job security in a non-compliant organization. Lack of ethical standards can create a toxic work environment, leading to high turnover. Organizations without a compliance framework struggle to pass regulatory audits. Non-compliance findings can result in operational restriction and loss of business licenses. In conclusion, a compliance management framework is essential for organizations to operate legally, ethically, and efficiently. It ensures adherence to regulatory requirements, mitigates risk, enhances corporate governance, and protects the organization's reputation. Companies that implement a CMF benefit from reduced legal and financial risk, improved operational efficiency, enhanced stakeholder confidence, and better decision making. On the other hand, failing to establish a compliance management framework exposes the organization to regulatory penalties, reputational damage, financial losses, and operational inefficiencies. Without structured compliance policies, business faces increased risk of fraud, data breaches, legal disputes, and loss of stakeholder trust. To ensure long term success, organizations must prioritize compliance as an integral part of their strategic planning. A well designed compliance management framework not only safeguards the organization but also fosters a culture of integrity, accountability, and transparency, positioning the company for sustainable growth and success in the competitive business landscape. In conclusion, we have covered 6 chapters as part of the Audit, Control, Governance, Risk and Compliance Series 1. So, introduction, the history of banking, regulators in banking, governance, risk and compliance is covered till now. We have 5 more chapters to go in this series. So, thank you for being with me till now. The next 5 are going to be exciting. Hope to see you there. Appreciate it. Thank you. Take care.